Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, just gone 4 p.m. here in Sydney. Welcome to the COB. I'm Juliet Sarli. Great to have your company on a day when we have seen quite a nice rebound on the market. We hit that 7-week low yesterday, but a good rebound today, up by around 1%. As we head into match off there, and the S&P ASX 200 also firmer by 1%, just under 8,600 points. The banks and Woolies have really lifted us today. Woolworths rising on a broker upgrade from JP Morgan. Coles was also higher, retained at overweight by JP Morgan. And REITs look good too, because we saw that bond movement which sparked a sell-off in equities yesterday. Mixed in early trading, government debt in Japan and here rising, so a little bit of upside coming through in those REITs. And oil losing some momentum today after US President Trump said plans for a strike on Iran have been called off following appeals from Persian Gulf allies. So let's get to the themes of the day, and really it has been this bullish bounce back, as I mentioned, a rebound from that 7-week low, the fact that the US is holding off on fresh strikes on Iran, boosting sentiment of hopes of a deal to end this conflict. Now, power surge, because despite that and that weaker oil price, energy stocks actually tracked the broader market rally, and the energy sub-index hitting a 2-week high, posting a third consecutive session of gains, defying that 2% decline in oil. Wait and see mode. We had the minutes from the RBA's meeting, and we also heard from Sarah Hunter in Sydney today. I was actually at that speech that she gave today. ANZ economists saying that the RBA's May meeting minutes suggest that policymakers believe existing tightening is now restrictive enough to pause and assess how the economy responds, making a June rate rise less likely. And Sarah Hunter in Sydney today also really going into the fact that this oil shock came out of nowhere. The inflationary impacts were something that they were not quite prepared for. Let's have a look at what we are seeing in the consumer stocks. I mentioned that JP Morgan upgrade for both Woolies and Coles, sending both those stocks higher, along with Metcash and Endeavour Group. GrainCorp, though, was under a little bit of pressure today. Looking at the REITs, they did well too amidst the reversal in what we saw in the bond market. Goodman, Scentre, SGH, Charter Hall and GPT all firmly in the black today. The miners, well, they did see a little bit of pressure because we do have a bit of movement coming through again here in the copper and iron ore futures. Iron ore falling below $108 a ton. BHP and Rio both off by around 0.6 to 0.7%. Fortescue has actually managed to reverse earlier losses of around 1%. And then having a look as well at what we've seen in the tech space. Tech One sold off today because its numbers did miss what the market was looking for. WiseTech and Xero there stronger. So getting into the top stories of the day, Technology One down by 2.6% on the close. First half profit falling short of analyst expectations as it lifted revenue by 11%. We had a great chat to the CEO, Ed Chung. You can find that on our website. Tuas rebounding from its hefty sell-off yesterday after Singapore's regulator said its local mobile phone brand may have breached the law. Shares up by around 16%. Northern Minerals up by an impressive almost 22%, backing Treasurer Jim Chalmers' order for 6 Chinese-linked shareholders to sell their stakes on fears of foreign influence over the rare earths prospect. Beacon Lighting also doing well, even as City cut its price target by 39%, warning it's heading into a slowing housing cycle with limited growth offsets. And Superloop there, pretty steady, but it's going to buy back about 4.5 million shares on market for its own employees to satisfy performance rights that will vest after June 30. Let's get more on the market action, and welcome to the COB, Jimmy Jang from GBA Capital. So a nice bounce back today, Jimmy.
Yeah, Juliet, strong rebound today, obviously with that 6 to 7 week low that we experienced yesterday. So obviously, like you just kind of have shared, Juliet, a lot of the investors are stepping back into those quality names of the after heavy selling. So a lot of the healthcare, financial, logistics and the retail like Woolies and Coles all recovered quite well. But right now, what's quite concerning is obviously the Australian market is still very heavily exposed to commodities and the global growth sentiment. So the volatility is probably likely to remain elevated until we see that geopolitical situation over in Iran and US remains unresolved. So obviously, like you also kind of touched on, RBA is in a very difficult position at the moment. So that minutes from that May meeting obviously showed that the policymakers are already viewed rates as kind of restrictive after multiple hikes this year. So this June coming meeting, will see a flat decision rate, maintaining the rate as it is, which will be obviously something the market is already pricing in. But however, the central bank's main concern is obviously still that higher fuel and energy costs spill rapidly into that broader consumer inflation throughout those obviously freight, construction, utilities, and services as well. So what we're kind of seeing is the stagflationary environment still looming in, and I think that's what the market is at the moment. For the past few months, it's been quite flat. Whereas over in the US, it's very much focused in the AI, so we're seeing a stronger performance index over there. So you just need to be a little bit more careful with this inflationary risk that's still looming. But obviously, we are still really liking that critical mineral space at the moment.
Well, let's talk about some of those stocks. European Lithium signing this mining deal for critical minerals. What do you think about this one?
Yeah, like it's something that market's been pricing in. Obviously, something that it's been publicly announced that was happening, but I think they just sealed the deal today after the trading halt yesterday. So obviously they entered that binding scheme implementation deed with CRML, which is a really good example of strategic consolidation, and that's kind of occurring across the sector. So we're kind of increasingly seeing a lot of these critical minerals assets viewed through geopolitical and industrial security lens rather than a pure a commodity in itself. So obviously that tends to support those M&A activities, the strategic partnerships, and obviously those government involvement in funding and downstream development at the moment. So governments globally right now, particularly in the US and Europe, is trying to secure domestic or Western aligned supply chains for critical minerals, largely tied to batteries, defense system, semiconductors, and advanced manufacturing at the moment. So that's why assets involving lithium, rare earth, graphite, tungsten, and fluorspar are attracting increasing strategic attention by the government, and that's why you're seeing a lot of these sectors moving towards M&A or even acquisition of the assets based in the US as well. So this will only probably grow. So it's really important that investors note these kind of movements and see what could be the next movement as well.
So mineral resources also in focus, up something like 167% in a year. We know it got sold off a few days ago when Chris Ellison sold his stake, but making a really big lithium bet here.
Absolutely. Like the company also recently upgraded their FY26 guidance, and they reinforced that strong liquidity, obviously, while continuing to expand both lithium and our own operation at the moment as well, Juliet. So what's really important that the investors should be noting is their kind of continuing optimization work at their Wagner and also their Mount Marion, while kind of strengthening their strategic partnership like POSCO in Korea. So again, this is another demonstration of these consolidation and joint venture work that's going to only increase in the sector. And obviously, despite the kind of softer lithium pricing over the past year, the major producers are clearly positioning for the next demand cycle, obviously driven by the electric vehicles and energy storage. And we're probably only going to see a higher demand for electric vehicles if these fuel costs prolong for a longer period as well. So although we kind of did see the oil price pulling back, but the WTI crude and also the US at the moment is still remaining at $102 right now, and the Brent is roughly about $110 mark. So it's still significantly higher than what it used to be. So demand for electric batteries is probably only going to get higher from here. So very bullish on lithium at the moment.
All right, let's talk about one of the new stocks on the market as well, which hit the boards yesterday, flying high. Not so much today. K-Tech Aero Systems. What do you think about this one?
very exciting IPO, and very well-placed IPO, should I say. Keytech Aerosystem it kind of gives that investors indirect exposure to the global drone boom that we're currently seeing at the moment. And DroneShield has been the biggest beneficiary, as well as EOS. Now I think it's time for Keytech to take that portion of the market as well. So rather than manufacturing complete drones themselves, so Keytech produces those the critical internal components, so wings, frames, structural assemblies, and those electromechanical systems that kind of go inside the drones produced by those larger defense contractors. So it's effectively, in my view, a picks and shovels model for the drone industry. And from what we've heard in the industry as well, the IPO was very heavily oversubscribed, reportedly attracting over about $30 million in bid, when the raise itself was only capped at $10 million. So very strong close, obviously post listing, and even with today's close, is still very much higher than what it used to be at 20 cents IPO price. And I think the demand for defense is only going to get stronger. Obviously, like I kind of briefly touched on the beginning, there's geopolitical instability, and also globally right now is only going to drive the structural re-rating of the defense system, spending by the governments. And Australia as well as the US are rapidly increasing their expenditure across drones and AI-enabled defense system as well. So very good one to put on the watch list. And if it's anywhere between 30 to 35 cents, it'll be a no-brainer to pick it up at this level.
All right, interesting. Jimmy, thank you as always. Have a good rest of your day. Jimmy Jang there from GBA Capital. Well, speaking of stock specifics, the stock of the day was Technology One. Andrew spoke with Henry Jennings from Marcus Today, Rudy Philippek Van Dyke from FN Arena.
Only upgraded their guidance 3 months ago. They're not going to upgrade it this close after they just did. Anyway, needless to say, I don't know of any CEO on the stock exchange that wouldn't give his left arm to be able to report numbers like this year in, year out. This is without any doubt one of the highest quality stocks on the stock exchange. Weakness after they report, well, for those who are not on board, that gives you opportunity to get on board and join Rudy on the register.
It's probably at a price which you could probably dip your toe in this one. So I put this one as a buy at the moment, and it's good to see that reaffirmation of guidance, and certainly the CEO, which will be interesting to see what he says later today on Ausbiz, of course, but Ed Chung seems very positive about the future. So I'm kind of surprised that it's down 4% this morning, but that's the way of the world. We've seen big moves down, and then it gets a big move up tomorrow when the brokers actually have a chance to look at the numbers. So I'd put a buy on this one around this price.
Well, 10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Scentre, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
Let's have a look at the market leaders on a positive day on the market, and Tuas rebounding after that hefty sell-off yesterday. ALS also looking good, along with Aura Banda Mining, AUB, and Domino's with a nice 5.4% gain. The laggards include Predictive Discovery, down by about 8%, 4D Medical, DroneShield, Vulcan Energy and Linus, while in the small end of town, Brisbane Broncos had a good day, up nearly 30%. Northern Minerals there too, up by 22%. The laggards in the small end of town include Emperor Energy, Island Pharma and Sky Metals. Well, tonight we get April pending home sales out of the US and a few more earnings as well, including Home Depot and Keysight Technologies. Tomorrow, locally, we have Japan's balance of payments due for March. No economic data out here. Later on in the evening, of course, the US April minutes from the last FOMC meeting. Locally, we've got earnings from Catapult, James Hardie, Serco. We're going to be speaking to executives from both Catapult and Serco, so of course keep it here on AusBiz. Also a few AGMs out there, including Resolute Group, and having a quick look at where the market has finished the day's trade. Up by 0.9% there on the CBO 200 on the close, while the S&P ASX 200 is firmer by 99 points or 1.2% to 8,604. So just jumping above that 8,600 point level. Only IT and materials lower today, that drag coming through from BHP and Rio. All right, we'll be back bright and early from 9:45 a.m. Eastern tomorrow. We'll see you then.